Live for another fun live stream on X and YouTube. Today we're going to be talking about MSTR, Q2 earnings talk, their recent huge Bitcoin buy, Stretch, all their preferreds, what's going on. Sailors invented the third ultimate flywheel that we'll get into detail about. I want to apologize briefly for the lack of YouTube content the past couple of days. I've had some technical difficulties with my video editing software. So we're actually going to be doing a live stream tonight, which, based on the recent kind of feedback I've been getting, people love the live streams. I think people like the live streams more than the videos because they see me off the cuff, my unhinged energy. They seem to love it. So, let me know in the comments. Let me know if you like the live streams. We love that stuff. Speaking of announcements, announcement number 2 is that I'm actually going to be speaking at the Minneapolis Bitcoiners meetup tomorrow night. That should be a really fun time, doing a panel on Bitcoin treasuries. Please, if you want to come say hi, come buy me a drink, come buy me a vodka Red Bull. We'll talk about Bitcoin, talk about Sailor, etc. Just pay attention to my X feed. You'll see the announcement. You'll see the address. Should be a fun time. And then I'm going to be reading some super chats at the end of this stream. So if you want to, go ahead and leave a super chat. Donate to the show, folks. I can't do this for free. All right. I'd love to address them. That'd be fantastic. And I would also love to take this time to introduce my co-host for the evening, my twin brother, Aaron Livingston. Aaron, how are you, sir?
Doing great. It's really good to be here. I hope you can hear me all right, and the audio is top notch as always. But yeah, just I'm a pretty casual Bitcoin observer. I've been in the MSTR trade for a little more than a year now, so lots of things have happened in such a relatively short amount of time, and obviously the huge announcement today is something we could definitely talk about. And getting close to 700K Bitcoin now. So
yeah, it's getting pretty wild. Why don't you, Aaron, kind of tell people how you first discovered Michael Saylor? Tell your story about how you discovered MSTR, how you got involved with the Bitcoin treasury paradigm in the first place.
Well, actually, I mean, you were somewhat of an impetus because around, I don't know, April or so last year, you had made a ton of money in NVIDIA stock, and I kind of got jealous. So I Googled, what stock returns better than NVIDIA. And that was when I first stumbled upon MicroStrategy. And so, I kind of went down that rabbit hole and found out who Michael Saylor was. And I mean, obviously a lot of it sounded just too good to be true in terms of what they had accomplished at that point, 4 years into their Bitcoin strategy. And so I did the deep dive in terms of YouTube videos. And I think the thing that really made me click was his interview with Lex Friedman. Just really made me rethink a lot of different things. And I'd always been adjacent to Bitcoin. I would say, have a pretty free market background with Austrian economics and whatnot. But he was the one who really made it click for me in terms of it being digital capital. I always assumed that Bitcoin might not have staying power because I was pretty skeptical that it would be widespread with payments. But Michael Saylor was the one who kind of really illustrated to me that the use case wasn't necessarily payments, it was store of value. And so that's kind of what really hit it home for me. And so that's how I got into strategy initially. And, once I heard his talking points on diversification and how, put all your eggs in one basket and watch it very closely, it kind of made sense for me logically, just to gigaport, as they say, and dump it all in there. So it's been great. That's the story initially anyway.
I love it. Yeah. I love his quote, diversification is selling your winners to buy your losers, or essentially that's what it is. And, it's really amazing. I think everybody goes through that MSTR discovery phase. When they discover Saylor, they discover his totally proselytizing, incredible YouTube videos. And, I have a very similar story. I'm very grateful that you brought MSTR to my attention, because that led to this crazy whirlwind that I've been on. Not only with MSTR, but all the treasury companies now, they're coming out of the woodwork. I really believe this is the new paradigm shift. And, that brings us to the topic of discussion. We're going to talk about strategies buy that they announced 3 hours ago. Why do you think that they're announcing on a Tuesday? That's out of the ordinary for them. What are you thinking?
Yeah, I just think that they're trying to front run their earnings call a little bit. It'll definitely give them something more to talk about too, and just to make that appeal as well as possible. Obviously, this isn't retroactive to the quarter that's already done, but they will on the call itself probably allude to this and their most up to date situation, and that'll give the market just a little bit more context in terms of how to value this going forward, because there's going to be some fireworks with the fair value, guns ablazing. I'm pretty bullish on it. I think a lot of people are sleeping. If you just look at the traditional financial websites and which analysts are even really looking at it and how many are really looking at it, I just don't think there's a lot of eyes on it overall, and so it's going to turn some heads for sure.
Yeah, I feel that this is the ultimate test, the ultimate litmus test that we've kind of seen in our lives regarding the efficient market hypothesis. Really, how much has strategies inclusion in the S&P 500 been? How much do the FASB rules allowing them to mark up their Bitcoin earnings as, obviously profit, $14 billion approximately? How much does that actually, how much does the market know about that? And, there's a debate to be had there. And I'm personally of the opinion that I do think that a lot of the S&P inclusion, a lot of these profits being reported now are a bit priced in. What I think is not priced in is just to the level that strategy is going to be able to buy Bitcoin because of S&P inclusion. And I do want to highlight a post before we come back to this. I just made this, people. I want to just talk about Saylor's third flywheel for a second. So Saylor's first flywheel, everybody knows, was that he discovered this way that if your equity is valued at a multiple of your net assets, you can then issue equity into the market and you can increase your Bitcoin per share in a way that's accretive for the shareholders, which is, a revolutionary thing now that everybody's trying to copy that. Then he formed this second flywheel by tapping the fixed income markets and opening up the ATM facilities on all four of his preferred stocks. So there's that. And then, this is the ultimate version for me, the S&P inclusion. And so, I wrote this just a little bit ago, and I think it's going to allow strategy to really dictate the price of Bitcoin itself. And, I'd love to hear what your thoughts are on this. And if this is a bit pie in the sky, I don't necessarily disagree, but obviously we're going to read it out, folks. A higher Bitcoin price means higher unrealized gains. And then the higher unrealized gains equals a higher earnings. Higher earnings is a higher valuation. Higher valuation is a larger market cap. And, this is where the S&P comes into play. With a larger market cap, you get a higher index weight, a weighting that is going to force the forced buys to buy at higher prices over and over and over again. So as you get a higher index weight, that's more passive inflows, more BTC buys. More BTC buys equals higher BTC. So, really, this is truly the most incredible, ultimate version of the Bitcoin hyper monetization flywheel that we've been seeing. And I think that S&P 500 inclusion is the definitive, honestly, final nail in the coffin for Saylor's ultimate victory. I just don't see how Saylor literally can't buy all the Bitcoin that's going to be issued, let alone all the other companies. Just the inflows is going to be absolutely nuts. Aaron, what are your thoughts on this? And do you agree with me that this is kind of the third flywheel that's been perfected?
Yeah, well, 100%. And, talk about the index weighting and whatnot with the S&P inclusion, especially. Really, you already touched on it with the efficiency of the market. I think once it gets included in the S&P, which, in my personal opinion, I think it's like a 95% chance that it will. I think at that point, the market's really going to look at that company's strategy compared to the others, in its same market cap in terms of dollars and stuff like that, and really just do more of a comparison because, they're going to be introduced to strategy for the first time. And when you really look up and down the S&P, you're going to find a lot of zombie companies that are just, why are they here type of thing. You have companies like DoorDash that are have a $70 billion market cap that just burn cash ridiculously. There's a lot of companies like that, a lot of zombie companies, and, strategy will come into the space and people will fully understand that and realize how much more of an efficient vehicle it is for their capital. And so not only will it get, more passive flows through the index itself when it gets a higher rating, but I think it's just going to turn more heads for them to hold it in terms of an individual stock in their portfolios as well versus just VOO or whatever.
Yeah. So You mentioned DoorDash, which is really funny because somebody brought this to my attention very recently, and this plays into another post about strategy I made today. We'll share this tab instead briefly. DoorDash, folks, I know you can probably hardly see this. That's all right. We can zoom in a bit further. This is DoorDash's right here, folks. As you can see, DoorDash trades at 335 earnings. Did you know this?
So I didn't, but I mean, I'm glad that I happened to pull that out as an example because that just further illustrates what's going on. I mean, you look at other companies that, retail company like Costco that operates on a relatively extremely small net margin, it's retail versus what like a software company would be, which is basically what DoorDash is. Yeah, even them, if they're trading 60 times earnings or whatever the situation is, that's still just so absolutely insanely overvalued. At least, again, value is subjective. It's my opinion, but it's really hard to see how anybody, once they even start to understand Bitcoin a little bit and strategy story, how they could decide just what is the right vehicle to park your capital in terms of just from a safety purpose as well, in addition to a growth vehicle.
Yeah. Yeah, it's really interesting. I think that we're going to begin to see like market discovery of really people willing to accept that, hey, you can pay a multiple on a treasury company that has an asset in its treasury that's growing at a CAGR of over, maybe 40% for the next 5 years. Maybe it's more, maybe it's a little bit less. Regardless, it dwarfs any traditional returns. It dwarfs having your treasury sit in fiat. And because shadow inflation is a thing, monetary debasement is a thing, which is why we love Bitcoin, folks. But, I made this post on Coca-Cola today because this is also illustrating, like, I just am totally bewildered why markets pay such a higher multiple for earnings, but they can't wrap their heads around an appreciating asset on the balance sheet. Both provide shareholder value at an incredible rate if you're buying Bitcoin specifically, I should say. But it's wild to me. So Strategy puts down $14 billion in profit in one quarter. That means that Coca-Cola's net income after all their cost of goods sold, they put down $3.8 billion. That's a difference of $10.2 billion in profit in one quarter. And, they did that by having an infinitesimal fraction of Coke's operating businesses, which is just totally crazy to think about. It's crazy to think about because of the 24x price to earnings ratio that Coca-Cola is trading at. Coca-Cola is trading at 3x the market cap of Strategy. So they're trading at 3x the market cap of a company that is, just beating their profit by 300+% in one quarter, which is just totally mind-blowing to me. That tells me that we're just so early to this paradigm shift and that the market isn't really truly understanding how to value these things. And, I'm waiting to hear a counter argument for people who will say that, like it's I don't know, just it's the MNAV conversation. It's the value. Like, why shouldn't this deserve to trade at a multiple if it gets that much shareholder value in one quarter? To me, I just don't see why that doesn't make sense. I don't know why there needs to be an operating business. And that said, this is the crazy part is that we talk about like the next earnings too. We are, just a few weeks into the next quarter and Strategy's already positioned to post a profit for Q3 bigger than Coca-Cola's Q2 and we're less than a month in. So, when Strategy gets to that point where they're in that third flywheel in the S&P flywheel with the passive buys coming in, how are they not going to be able to post a profit much bigger every single quarter and still trade at a lower multiple than all these legacy companies? Aaron, your thoughts? What are you thinking?
I mean, I concur. I mean, ultimately, another thing to look at too when it comes to the legacy companies that you just said. So many companies these days, they're obsessing about operationalizing their business just to net down, do 0.1, 0.2, 1% better on their net margin, et cetera, whatever the situation may be for any individual company. Okay. But this is going to force a ton of companies, especially in the S&P, to really look at why are we spending 99% of our time operationalizing our P&L to get a sliver of margin back when we can maybe devote, another 10 to 20% or however much percent of our energy into looking at our balance sheet and leveraging it and understanding how these assets can perform for our book versus spending 100% of or however much of our time operationalizing to get really a petty return on your margins, because there's a lot of industries out there, some more competitive than others. And again, if you just look at some of these zombie companies, it's just like, I mean, they're just scraping the bottom of the barrel trying to get pennies on return. And then it's like their finance teams, they're not even like looking in this direction. It just feels like a cheat code that people aren't using. And I'm waiting for an argument, and I have yet to hear one. Why are more people not paying attention? And there are enough people paying. We have a lot of copycats in the market and going forward right now, right? A lot of people coming into the Bitcoin treasure game. There's a lot of people coming in. That being said, though, I mean, how many companies in the S&P own Bitcoin now? Is it 3 or 4, or somewhere in there?
Yeah, it's
single
digit.
digit.
It's gonna be 4. Yeah, which is just wild.
So, I mean, I think it's just going to force the conversation. Like, a lot of people are going to look inward, and a lot of boardrooms are going to be like, "What are we doing? Like, why can't we do this?" And again, there's a lot of companies out there. Like, look at GameStop, a zombie company, but they had a very sizable cash balance, and I don't know what it is now, but billions and billions of dollars that's ready to be deployed into a perfectly invincible digital firewall of cyber hornet capital, or whatever you want to say.
But yeah, absolutely.
And,
we both come from retail management, very experienced in that trade, and you're aware just as much as me that that is just an industry that's on a pennies in the dollar business. And that experience for me really led me to believe how much of the S&P 500 is just filled with operating businesses that are going to totally go by the wayside in the next 5 to 10 years because of AI, and what's their path out. So I think that you raise a really interesting question, that this is just, it's almost like the Bitcoin treasury thing is just on a need to know basis. Like, you're going to discover it when you need it the most, because there's a lot of people that aren't, they're not forced to look outward. They're not forced to look at their balance sheet. You look at the Mag 7, when you're having really high margin operating companies like Meta just printing $40 billion in profit like it's nothing, that they're not incentivized to look at their balance sheet because what they have is working so well. And
it's reflective of Saylor's story himself, obviously, and everybody that's probably watching this is probably largely familiar enough with that so we don't want to dive too much into that. But was beating his head against the wall, just trying to compete with Microsoft and literally try to scrape market share from the Microsofts of the world at a 0.1% basis at a time. And he obviously had to look inward and look elsewhere. And look how it's played out.
Yeah, for sure. And, that's just an amazing story. He was just in a very unique position, being totally unable to compete in the software arena, especially now. So he couldn't have timed that exit into Bitcoin at a better timing. That's for sure. He just couldn't compete with Microsoft and the other tech giants. And lo and behold, that's what happens. So yeah, pretty wild stuff, folks. Thank you for the comments. Thank you for the super chats. Go ahead.
It is funny how you see on all the bears and the MSTR crybabies, the traders who jumped into this trade and have a low time preference, and it is funny seeing them, and they're looking at they're saying that look what Bitcoin just needs a drawdown and Saylor will be forced to liquidate and all this other stuff. I mean, it's just ridiculous. You look out at let's say you take whatever his bear, I think his bear case price projection for Bitcoin is $3 million a coin in 2045 versus his base case, which is 13 million. Look at the projected CAGR of that and just fully understand that, I mean, that return is just absolutely insane. And if you look at how much overall Bitcoin they hold now, the 630K roughly, I mean, at that point in the future, 10 years, 5 years from now, 1 year from now, are people going to be griping about, his Bitcoin cost basis being a couple thousand higher or lower than what it is now?
Yeah, I saw some idiot on X today talking about how, why did he smash by so much at that price? Why didn't he wait for a dip? And it's do you really think that in this arms race where you need a race to acquire the most pristine capital in the world, that you should be waiting to save $1,000 per coin on some dip? I mean, is it really going to matter all that much when you're in the arms race to make sure that you have the coin before it's $1 million? These people are just so stupid. They're absolutely ridiculous.
It's
and
why would
this idiot? And sorry, I'm getting worked up, folks. Sorry, I got to bring the energy a little bit. This guy in the comments, MSTR is gonna tank. It doesn't even make any sense. They're super unencumbered on their balance sheet. They're super unencumbered with their debt. Bitcoin is inevitable. So how could you be bearish on the company that owns the most Bitcoin? It just doesn't make any sense at all. So sorry for the rant, but these people, these very low time horizon, high time preference idiots are just totally unbearable.
Very well said. Very well said. I mean, yeah, it's really hard to wrap your head around. And people are at different chapters in their life, right? People are in the trade or in the they're on Robinhood for a totally different reason than you or I might be in our goals for investing capital, and that's fine and that's dandy. A lot of people, this scratches the gambling itch for a lot of people too. So it's people just look at it through a different lens, and that's fine. That dandy. It just drives me nuts when people aren't even bothering to educate themselves a little bit about even like what Bitcoin is or what strategy is or how they structure their debt, know anything about the preferreds. And so there's just a huge education gap, not only, I mean, in obviously the broader financial space, but even inside the small crypto niche, there's just a huge education gap that needs to get filled. And it will, because Bitcoin's going to force the hand of everybody. Ultimately, as people get extraordinarily wealthy regarding this, more and more eyes are going to be on it, just wanting to do the copycat thing. So,
yeah, I'm seeing some comments briefly that my camera is lagging. It appears to be totally fine on my end. Really appreciate the comments. Let me know, Aaron. Is this fine? Do you hear me with no lag?
It's fine.
Yeah. Okay. Let me know, guys, if this is just totally unlistenable or unwatchable. That'd be great to know. But yeah, just doing the math on this Bitcoin purchase right here. They bought 21,021 BTC today. Gotta love that number symbolism. Just to let you know, that's 3.3% of their stack increase, which is just insane that they're able to increase it that much at that scale because of this preferred. These are all from the proceeds from the stretch offering, folks, just to let you know. Sailor obviously got the money, and as soon as it hit the account, he smash bought BTC today.
By the way, can I make a point about this and how, like, you made a comment about, like, why would Sailor strategy, the folks in charge running the playbook, why would they attempt to use any of their actual finite time to try to get an edge to maybe time the market on a singular Bitcoin buy when they could be spending that time using AI, super intelligent AI, to develop another preferred that the thirst for these has just been unquenchable? Like, why would it's just like the stupidest use of their time ever when they've already demonstrated that, like, the current playbook they're doing is wildly successful. And it just suggests, it blows my mind that for anybody to suggest that they do something differently or that they know more than Michael Saylor what he should do. Hindsight really is 2020, so it's really easy to say, like, yeah, they should have bought the dip. It's so easy to say, but anybody saying that kind of thing, like, why don't you just show me your returns? And then if you're smarter than Sailor and do a better job, then maybe I'll start taking your advice. But that's
at the end of the day, none of these ex-bears, none of these just total loser bears who are just talking smack about Sailor, none of them were having lunch with Donald Trump at Mar-a-Lago, were they? Or at the White House itself. So that's the thing. And, you see this dilution argument keep popping up, people hitting the ATM, and it's just so ridiculous. Back in November, starting in November, when you saw the MSTR MNAV go up to 3.2, 3.3, 3.4, wherever it was. And, Sailor really realized that, we're about to get in an administration that's going to be very pro-Bitcoin. We're going to stack the cabinet. We're going to stack these positions, SEC chairman, people that are super pro-BTC. And, he really had to act. And he went on that historical accumulation spree, and you saw nothing but whining about the dilution the entire time. And then, because of that, you're able to see him mark up these earnings on the balance sheet, like literally 6-7 months later. So, it just reminds you that the people complaining about the strategy just don't understand the strategy. They're seeing a microcosm of what Sailor's grand master scheme is. And that's why I keep saying, folks, you got to think on a geologic time scale. If you think that MSTR is still going to trade at $400 when Bitcoin is $500,000, I think that you probably need to get your head examined. And, there's we all know that MSTR is one of the most highest traded equities in terms of volume in the entire United States and in the entire world for that matter. And the ATM is like such a small function of the total volume as a percentage basis. That's what people need to understand. The ATM is like 2% of the total volume when Saylor hits it hard. So, it's like if you're buying into the stock so Saylor can issue equity to get more Bitcoin, which is a process that he's been very, very blunt about for years. And if you buy the stock and then complain that he's just doing what he said he's going to do, it just boggles the mind that people actually whine about it. I don't know if you have any more thoughts on the ATM bears, but I just think they're ridiculous.
I mean, you mentioned geologic time, and this is quasi related to that. But if you just do the math based on this Bitcoin buy alone, so they bought how much did they buy? It was 21,021 Bitcoin. So if you divide that by the weekly mining supply of 450 Bitcoin, that's 460, or is it? It's 450 a day, right? Sorry, whoops.
Yes,
450. So it's 466 days of the miner's supply bought this week. And knowing Saylor, what is it? It's almost Wednesday. So in 5 days from now, we might have another buy. Granted, it's not going to be 21,000 Bitcoin, but just put that into perspective. And the thing is, right before we jumped on the stream, by the way, Jack Mallers mentioned that they're going to have even more Bitcoin than initially thought to start off 21 with. It looks like they're I mean, it's just everywhere you look, there's going to be this like reflexive just smack in the upwards trajectory of the price. I think again, it's just supply and demand. I would encourage everybody on here to go look at the CEO of CleanSpark did a interview with David Lin. And I think that was just recently released, where he basically, honestly, he echoed a lot of the things that I was already feeling about how just the supply and demand from the Bitcoin treasuries is going to be the driver of 200K Bitcoin this year. And when you see buys like this with 466 days of miner supply getting bought by strategy in a singular buy, it's just so hard to see any other reality than a gigantic upwards. It's going to be an L shit. It's going to be a hockey stick up and to the right.
Yeah. And what's crazy is that, I think that it's now firmly impossible for anybody to catch Saylor. I would have said it probably wasn't impossible a year ago, regardless how unlikely it would have been. But I do think, if Mark Zuckerberg or somebody decided that they wanted to be the number one Bitcoin treasury, they probably could have last year. But, so now we have Saylor saying that he's going to be number one in perpetuity. That's a given. That's not debatable anymore as far as I'm concerned. But right now you're seeing the number one juggernaut buying, what do you say, 466 days of miner supply, which is... That's more than a year, folks, for those who aren't keeping track. So whatever that is, 15
Actually,
months.
There's I'm sorry. My math is off right there. There's no way that's right. I added an extra zero. It's 46 days of miner supply. I'm sorry. Regardless, the math still stands. When you set it back,
regardless, it's wild. Yeah. Regardless, it's wild, folks. And the point that I was going to make is that you have the number one juggernaut that's accumulating this much. And then on top of that, you have the people that are just competing for the number two spot now. You have all these companies that haven't even got started yet. You have 21 Capital. I saw that is probably going to start at 42K BTC. You have Adam Back's BSTR that's starting. You have Nakamoto that hasn't even started yet. All these companies that are, currently in a merger, they're currently filing paperwork at the SEC. They're doing regulatory hurdles just to be able to start stacking. So a lot of the other big players that are going to be bringing in the big capital to really do these huge buys that may be strategy, that could be comparative to strategy, they haven't even gotten started yet. And then, obviously Metaplanet, they're definitely in contention to be the number two biggest one day. They just got hit out of the number 5 spot by Trump Media Group, I believe. And there you go. There's another one, Trump Media Group, that can just raise a couple billion and buy 19,000 Bitcoin in the blink of an eye.
You brought up Zuckerberg. This is a very salient point, and it's looking back, and it's somewhat funny, but also somewhat sad in terms of just how large pools of capital can be just horribly mismanaged. So this is just hysterical. So since 2020, Reality Labs, the metaverse division of Facebook, Meta, has lost $60 billion in operating losses trying to get the metaverse off the ground. And to this day, I don't know a single person that puts on the headset and enters the metaverse. I mean, Oculus is
really quick. That's almost as much as Strategy owns.
Correct. And so, that was since 2020, which is right. The 60 billion since 2020, which is right when Saylor started buying. So imagine if they had been deploying this capital into Bitcoin over time. I mean, now, like, they should have, because now they're never going to catch him. Like, there's just no chance. I mean, any large buys coming from Zuckerberg, realistically, they would just drive the price up so high that they would just accumulate so far less Bitcoin in terms of absolute terms. So, yeah, I think you're right. I think Saylor's number one forever. He's established a moat, and it really is a testament to his foresight into this trade. It's just bananas. He really does feel like he traveled into the future and saw the future and came back and acted upon it. Because, I mean, it's bananas.
Absolutely. Yeah, absolutely. And everybody listening, thank you for tuning in so much, talking about MSTR tonight, talking about strategy and Saylor. I want to highlight this comment from Ted. Thank you for the $10 super chat, Ted. He doesn't need $10, and I don't need the $10, but let's get the ball rolling. Thank you, Ted. We're going to be addressing every super chat question, folks. So if you want to leave a super chat, leave it on YouTube. I'll get to it. Thank you so much, guys. Thank you, Ted, for the support. And, we might as well talk about the preferreds a little bit more. I want to get your take on Strike, Strife, Stride, and now Stretch. And obviously, the latest argument from the strategy shareholder base, like, now that BTC yield is tougher to accumulate on a percentage basis because of the huge size of them. And as you can see, their strategy's year-to-date goal, guys, for those who didn't know, was 25% for the year. And they actually achieved that now, 5 months early with this buy today, which is amazing to see. So as we see, BTC yield harder to get for the shareholders, that increased Bitcoin exposure. It's just harder with scale. So, Saylor obviously foresaw that coming. He wanted to find ways to continue to buy Bitcoin. So he's tapping the fixed income markets with the preferred offerings. So as we talk about Stretch, Strike, Stride, all these guys, strategy is going to get a credit rating. So Aaron, what do you think of what has to happen necessarily for a credit rating for something new that hasn't been rated before? This type of company has never existed before. And, if not, maybe you don't have any take on that. Where do you see the price discovery of these preferreds go? How do you see the market reacting to these products over the next few years?
It's so hard to say. I mean, obviously, because Saylor's trying to fill out every rung of that yield curve, really. So, I mean, each notch of that is just serving an entirely different investor class. I'm thinking a lot of these fixed income, pools of capital are just they're retired boomers who are looking for that dividend just to live off of, just the free cash flow of that. But again, that's such a broad base. We're talking, and I don't have the numbers in front of me about the total amount, the trillions of dollars sitting in just the United States in fixed income. But if you just look at that just gigantic pool of capital and how many different investor classes that appeals to, the sky is the limit. Like the freaking, outer space is the limit as far as I'm concerned. And ultimately, Saylor is using, we have an MIT super genius, 200 IQ research scientist, financially engineering the best fixed income products backed by the hardest pristine capital that's ever existed. Just think about all of human history and what we've done to trade and barter and conduct commerce. We're only 15 years into this Bitcoin project, and we're only how long? Months into this fixed income thing that strategy is doing with the preferreds. Again, I don't have any specific predictions, but I think obviously the demand has been insatiable. What was Stretch? Their offering it ended up being 4 times more popular than initially they had thought.
5.
5, sure, yeah. So it's, And there's no stopping them. So as they build up more and more tools on the yield curve, and I don't know how many they're going to have. I mean, obviously, but they're just plugging in another hose to that pool of capital, and again, they're using the proceeds of all of that to buy the greatest performing asset over the last since Bitcoin's been a thing. The greatest performing asset is Bitcoin. They're using all that capital. It's just fire hoses. They're just connecting a giant fire hose to the bottom of the fixed income pool, and they're just taking all of it. And
what's amazing. So let's. I love your points. Couldn't agree more that they're setting up the fire hoses. That's exactly what's happening. So you guys can't see us getting a bit cut off, but Strike for the year to date. Strike became available January 31st, trading on the market. Now it's up 32%, a fixed income product. And, while Aaron was talking there, I actually went to ChatGPT and I asked, what's 1% of the US fixed income market? 1% of the US fixed income market is $474 billion, which is wild to think about. So, you got to think like, how much is that market going to grow over the next 5 years? 5 years of market discovery of the preferreds. And then you think like, okay, if they were able to feasibly get 1%, and let's assume the fixed income market didn't grow at all in terms of, a total capital pool basis, the total raw number, if they weren't able to accumulate that, let's look at their Bitcoin hoard. So their Bitcoin NAV right now is 74 billion. That's just crazy to me. So let's just do the math really quick.
So that's, yeah, I mean,
that's 6.4 times they could, if they were able to capture that in dollars today and buy Bitcoin, it probably, the price of Bitcoin is obviously higher, but they could probably 4x their Bitcoin stack outright. Well, not necessarily, just because obviously, you can't just buy that much Bitcoin at one time without the price going up. But hey, folks, just for painting a picture's purposes, if they were able to purchase Bitcoin at spot today, roughly speaking, with 1% of the US fixed income market, they could increase their stack by 4x. Which hold on a second, that literally just goes into their pristine collateral hoard that just gives them a better credit rating. It's just an unbelievable cycle that's going to be happening over the next few years. And like, the world's asleep to it. I feel like nobody's even aware that this is happening.
I mean, ultimately, like, they're becoming the Bitcoin bank, and like the preferreds are just like, I mean, if you like go to any traditional financial institution like a Wells Fargo or a Chase Bank and go to the website and just look at all the services that they provide, it's like pretty staggering the level of products that they have. Strategy is going to be doing all of that and more with a better backing because it's perfect capital. So, I mean, just again, speaking to the reflexive nature of this up and to the right thing that's going to happen, I just don't see how this level of demand is results in anything other than just like gigantic price correction and the price discovery of a much higher magnitude. Because again, I'm waiting for an argument.
Yeah, absolutely. 100%. So, just asking ChatGPT here, we're doing some modeling, folks, just to find out, how much could they realistically capture? Is this realistic? I don't know. In my mind, it's kind of conservative. So I asked ChatGPT, I said, what if the fixed income market grows by 5%? So like, maybe that'll take till 2030, whatever. And let's say maybe strategy captures 4% of the fixed income market after it's grown. How much Bitcoin could they buy? And, so step one, you got to calculate the 5% growth of the UX fixed income market while strategy's having the market discovery of all these preferreds. So like, while, the fixed income market's growing, in the background, you have the market actually discovering what Bitcoin backed preferreds are. And, that's just crazy. So the fixed income market would then grow by $2.3 trillion by 2030. Let's just say, and strategy would capture $94.8 billion of that. And, you got to estimate then the Bitcoin purchasing power. So if they use 100% of that to buy Bitcoin at a bullish case of 150K BTC, let's say, that's an extra 632,000 Bitcoin. It's just ridiculous. It's absolute maddening. Just Just crazy. And, this is another good insight that there's only, 5.5 million BTC that's liquid right now that's available. And yeah, individuals are the vast majority owner of the Bitcoin right now. And, maybe some wallets will wake up to sell for fiat at these higher prices. But, it's just crazy to say, like,
well, that 948,000 Bitcoin is basically close to half of all the Bitcoin that's currently on exchanges right now.
Correct. Yeah.
Which is like just
the grand thesis, folks, like Saylor figured out the fixed income game. And, as you see the market discover these products, what amazing yields they pay comparatively to bonds. The fire hoses are plugged into the pool and there's no shut off valve. And he's going to be able to dictate the price of Bitcoin with S&P inclusion with these preferreds. It's just getting crazy, folks. Just getting.
By the way, and not enough people talk. The S&P is a one index. It's one.
Yeah.
So, like, I mean, just saying, sky's the limit.
What's the total market cap of the S&P? Do you know off the top of your head?
No.
Yeah, I'm gonna look here because that would be interesting. I did some math on this a bit earlier, so. Some estimates are saying, holy Lord, let's say less conservatively, like 55 trillion. And, so for those who don't know, Strategy's market cap, guys, Strategy's market cap is, what is it now? Almost 112 million. That's just mind blowing. 1,000 million, sorry, 112 billion. So if it's 112 billion, that puts them in the top, 80 companies by market cap? That sounds about right. So they're going to be weighted a lot higher than a lot of the other S&P companies. So it's like they get inclusion right off the bat. And just the math says, like, if we do like what's 1% if they get a 1% weighting of 55 trillion, that's $55 billion. And then, it's funny. It's already asking, well, let me know if you want to model how 55 billion in passive inflows could impact MSTR stock price or BTC holdings. And, it's just wild to me. Like, we've seen, like, as a historical precedent, we all remember what happened with Tesla's S&P inclusion. It got front ran a little bit, but the passive inflows since it happened have just been absolutely nuts, and it propelled it to be in the Mag 7. And then we saw what happened with Coinbase this year. Coinbase got S&P inclusion, I don't know, probably a month ago or something. And the stock is up 44% year to date. But when it happened, I want to say the stock went up like 30%. So it's so tough to see, like, like I said, this is the ultimate litmus test of the efficient market hypothesis. How much of S&P inclusion is priced in? You still have people that don't even think they're going to get in because they're saying the S&P won't admit a company that doesn't have an operating business. And, at the end of the day, I just think that the S&P needs strategy more than strategy needs the S&P. And, as it just continues its inevitable ascent of becoming the most valuable company in the world, how long can they ignore them?
I'm waiting for Vanguard to admit that they don't need MSTR. They won't, even though they've been so ridiculous to crypto.
How come Vanguard customers haven't called their bluff out? Like, hey, you guys are so averse to Bitcoin products, but like, are they the biggest holder of MSTR?
Actually, I did. I used to have Vanguard, and I actually was trying to open another account more so recently, and I went with. I actually pulled up Vanguard to do it, and then I was like, wait, hold on, this isn't going to work, because I was just wanting some more freedom, as little restriction as possible in my trades. And I just remembered that, so they didn't get my money. I mean, and it's only a matter of time, but I just think it's hilarious. Like, somebody in that organization, actually multiple people, have to understand the blatant hypocrisy on that of, like, trash talking Bitcoin, trash talking crypto, but meanwhile, they are the largest. They own 7.88% of outstanding shares of MSTR. Vanguard Group owns 20.59 million shares of MSTR. And are they doing it because of the operating business?
You said 20.5 million?
Yeah, 20.59 million shares Vanguard
owns. That could be like 8% of
They own $8.124 billion in MSTR shares.
Yeah. So kind of funny how that works. Don't let the customers buy the Bitcoin. You're anti-Bitcoin, but you just want the levered Bitcoin. I see how it is. Sounds good. We
Yeah.
love it, folks. We love it. Yeah, and one thing I want to touch about, just like going briefly back to the treasuries talk. I want to talk a bit about Smarter Web Company, and I want to hear your perspective on this. So, like, we were talking about like legacy operating businesses and how how much of a struggle it is in this day and age to provide shareholder value through traditional profit and loss. So Smarter Web Company, it went from a 4 million valuation over 1 billion in under 2 to 3 months. You got to think about that. So all these small businesses of the world that might be worth $4 million, might be worth a little more, might be worth a little less. And they're able to announce that they're buying Bitcoin and raise enough money and do it fast enough to where their market cap went from 4 million to 1.3 billion in about 60 days. Do you see that as like an amazing story that people are going to really latch onto and think like, oh my God, if these guys can do it in the UK, I can do it over here. Where do you see like just the market discovery of the narrative happening? Do you see that as powerful? What are your thoughts?
I mean, I see it as incredibly powerful, and I really do feel like we're just really scratching the surface. I mean, obviously, if you look out at like what the UTXO guys are doing, trying to get multiple of these treasuries off the ground and really they're going into all corners of the world trying to trying to get this off the ground. But I mean, again, we're just scratching the surface on what's possible because the environment in which you're able to issue equity or raise capital via debt, I mean, that just varies so much on a country by country basis. And then not only that, but just the conditions of the macroeconomic environment as well in those respective countries. So there's so many different things at play as we're going to see these pop up and up. So is it exciting? Absolutely. But again, it's hard to put into words because we just haven't seen. We're so early. We're so early that we don't even know like what's going on yet. We don't have the slightest clue. It's going to be every country in the world, and it's nice to see the United States being the leader in this regard too. But really, when you think about it, not only in terms of individual companies all around the world, tapping their own capital markets to get into this trade, but look at the governments too. They're using the monopoly of violence. They're going to use a monopoly of violence to extract capital from private people to buy Bitcoin with it.
That's kind of what government is, folks. That is what government is for those who are uninitiated.
Yeah, I mean, ultimately, it's good to see the United States front running on the strategic Bitcoin reserve, but it is the ultimate big brother thing, right? I mean, they're deciding like, hey, we're gonna by means of theft buy Bitcoin for you. But in this case, I would say if you're investing in Bitcoin on behalf of the public, that might be the best use of tax dollars I can possibly think of. I guess it's just, not to get political, but how much do you value freedom? If the government just an observation.
Good point you raised. Yeah, definitely agree. Yeah, there's so many things that I'd rather have my government be doing than funding gender studies degrees in Guam. You know what I mean? Like, I'd rather have my tax dollars go to Bitcoin. I have a good super chat here. Pickle and Chill, thank you so much for the $5 super chat. Aaron, why don't you take this one? How do you retire on BTC without selling to fiat and dibs? Sequence risk worries me. If Stretch fails, we don't know its long-term viability. What's your plan?
I mean, ultimately, the STRC is acting like a stable coin, right? And so, again, we'll have to see like what other similar financial products are like that in terms of that individual product. I mean, obviously there's going to, and again, I don't want to get into it now, but I actually built on a theoretical basis something called the Satoshi Stream Fund that was an engine for Bitcoin native yield. And so that could potentially be a solution. Unfortunately, I'm just a single person, and to get that off the ground, I would have to employ a lot of lawyers and coders and do that. So I've actually referred that to some pretty high level people, and I sent them the white paper that I wrote and gave them the infrastructure. It's available on GitHub. I can link that out to anybody who wants to see it. But it'll be something like that, a Bitcoin native.
Let me give my answer to Pickle and Chill really quick. We got to remember that Bitcoin backed lending is literally in its infancy and it's just getting off the ground right now. How do you retire on BTC without selling to fiat? Is just do what Michael Saylor's doing and take out a loan against your Bitcoin and live off the loan. That's my answer to that. And I think that Lord, we talk a lot about like corporations, using debt to buy Bitcoin. Just wait till individuals can borrow at good rates against their stack. That's when you're going to see the mass populace just decide, okay, why wouldn't I borrow fake money at a just getting eaten away by monetary debasement and then just use it to live off of so I never have to sell my Bitcoin. I think that you're definitely going to see that as a strategy enacted by a lot of people. And, if you need expense or if you need a stream of income coming in just to pay your bills, or you need some fiat coming in to do that, like that's what these products are for. These products will be amazing for that. And, what's cool is that like Michael Saylor talked about this in his announcement of Stretch, is that like, they're all for different risk appetites. They have varying levels of seniority in the capital stack, Strife being the most senior, for example. So really you get to see like, okay, and Saylor talks about that you can go into it. It's called like a BTC rating. It's like the credit worthiness so that this product is backed by. Obviously you can pick a Strife if you're comfortable with that. To me, like Strife is like obviously like a good retirement product because it's paying an 8.7% effective right now. 8.7% effective, which is maybe more than double a U.S. government bond. And it's backed by the best. It's the most senior in the capital stack of the best stack of collateral in the planet. And, just...
Is it more senior than the converts, or are you just talking in terms of the...
I believe that Stripe is the most senior. Yeah, it's even more senior than the converts. And on top of that, folks, incredible yield, double a government bond, it's also returned 31% year to date since March 21st. Since March 21st, that's 4 months, like, it's up.
People need... That's just so ridiculous. That just shows like it's like an 8.7% dividend growth vehicle that's like probably performing on par with Bitcoin right now ever since its inception.
That's the most protected. That's the
right. It's like
stack. So to answer your question, Pickle and Chill, thank you for the super chat. I mean, that's kind of my plan. My plan, honestly, guys, speaking candidly, is I'm a younger guy. Me and Aaron are both 29 years old. We're twins, believe it or not. And so, like, what you can do right now is get a couple good years of growth with the treasury boom, and then maybe rotate some of your capital into just a super high dividend paying Bitcoin backed credit instrument. So the options are going to be coming out, folks. That's quite obvious. We love it. We love it, folks. All right. Thank you for the $4.99 super chat. I love YouTube. Incredible username. Will CEP be 21 shares? Yes. And CEPO be BSTR? Yes. I'm not exactly the conversion, but that is exactly correct. I'm not exactly sure, how that's going to happen. But if you buy Cantor Equity Partners, yes, you will get exposure to XXI once that ticker is available. Same thing with CEPO. That's correct.
Is Stretch trading on the Stretch ticker yet? I saw that it was available. And
no, it's not trading on the Stretch ticker. It's trading on MS something. It's MSTRC or something like that. I'm not sure exactly what the ticker is on Fidelity, but hey, you can go get it right now, folks. Ted, thank you so much for the $10 super chat. Can you discuss how fiduciary requirements will force institutional assets under management into BTC adjacent positions? Timeline, first movers. That's a great question. It's a tough thing to answer in terms of timeline because, Jeff Booth has this thing where he says, like, the the market is being repriced in Bitcoin right now. You know, people always talk about Bitcoin as if like when moon, like when's it going to happen? And the reality is that it's a process that we're all living through. So it's tough to predict first movers, but I think you got to go back to the Sailor story, and it's going to be people that really need Bitcoin that are going to be the ones that discover it first, which is kind of telling. It's really interesting that, you know, maybe some of the Mag 7 will be like people defecting after companies that see a necessity for it right now. So, you know, down the road, maybe you'll see a Mag 7 shakeup where it's companies that really realize, you know, our operating business sucks. It's not feasible in the long term. So we need to turn to Bitcoin. First movers, you know, that's a great question. I don't know, Aaron, do you have any opinion on like dying industries out there? People that could definitely see the board just thinking, all right, we got to do something else for our shareholders.
Well, I mean, the last chat said fiduciary requirements, and the first thing that popped into my head was fiduciary responsibility. So, how many shareholders out there that are either employees of companies, large shareholders of companies, people that are invested in the success of whatever they own? At what point are they going to get vocal enough to the board, to the decision makers in the company, and say like, "Hey, it's clear based on a litany of case studies in the market that this is the most efficient way from a fiduciary standpoint to get return for your shareholders and to protect the assets on the book." So at what point are we going to see that? And I just want to make that point as over time, you know, people need to act in the fiduciary responsibility of the company. And again, it's just the broad total market, the amount of money just sitting there in these gigantic corporations. I just can't, it's so hard to wrap my head around it. I mean, it's nuts. It's nuts.
Yeah, 100%. Pretty wild. All right. Rockstar Bitches says, can you please discuss SQNS? Also, Strife is below the converts. Thank you for that fact check. I saw a graphic. Somebody put it above the converts, and I think maybe that's been... It makes sense that the converts are above Strife, so thank you for the fact check. Can you discuss SQNS? Yeah, sure. I mean, right now it's like I don't have like a major update. You know, I think people are asking for an update because they saw a lot of negative price action. You know, I didn't see what their stock moved today, but they were down another 6%. So, you know, you're just going to start to see this happen with a lot of these companies that are using pipe investors. And I did make a post about this, is that when you have, you know, a certain portion of pipe investors that are going to be getting into the stock and, you know, in some private placement where in the details of the private placement are known. Sorry, I need to share this tab. You can't even see it. That's fine. That's fine. You don't need to see it. But the stock went down 6% today. So the terms of the private placement are known, where the people who got in on the private placements are able to sell their shares at 140. You got to think of like the people who now own SQNS. So it's traders. It's people that know that there's going to be an influx of pipe investors that can sell shares at the market. And, you know, they're allowed to do it when the stock is 140. So you're going to just see that happen with every single one of these companies that has the pipe investors. It's just going to happen, you know, for whatever amount of time that these people are going to be locked out. You're going to have people front running the insiders selling off. So volatility is vitality. I don't know if this is true. I didn't do the calculation, but I think SQNS is trading near a 1 MNAV right now, which is interesting. You got to understand, like, the volatility is part of the process. Like, these are the, you know, people just, it's so crazy the time horizon that people have on these investments. Like something like the pipe investors, like these are necessary to get off the ground with the strategy. So, you know, it's one of the things that like you have to accept with the territory. Like there needs to be ways to raise capital. And if you're not willing to stomach drawdowns, then this just isn't the game for you. Like, I mean, not all people are able to hold a 200 vol asset, folks. It's just, if it's not for you, then it's not for you. Now that said, they have 3,000 BTC. So any company that has 3,000 BTC, I am obviously very bullish long-term on. Where does that put them in the total ranking? It puts them at they're the number 22 biggest corporate holder of Bitcoin already. They just started their strategy a few weeks ago. They're the number 22 biggest holder of Bitcoin. So for the love of God, people, stop having panic attacks about the price action. Thank you. Aaron, any agreement, any disagreement, any thoughts on SQNS, etc.?
Yeah, I mean, not a ton, really. I mean, I just concur with everything you said, really. I mean, you just got to zoom out. I mean, at the end of the day, just if you zoom out and kind of understand where these treasuries perform, I mean, don't get me wrong. Here's one thing I will say, and I don't know if I agree with the bears, but I could foresee this being a possibility. If we enter a true Bitcoin mania phase in the near future, right? So let's just say, for sake of argument, Bitcoin goes to $300,000 by the end of the year. It's possible, if let's just say that happens, and this will be a time where the public really starts to understand how Bitcoin treasuries can outperform that insane growth. And so when you look at these things, if you see a reaction and them piling a bunch of money in a bunch of different companies, I could potentially see a .com style like bubble performing in the Bitcoin treasuries. And then obviously you'll see like a lot of downwards price action when that bubble pops, and you'll see, the other end of the other candle when Sequans just drop. You'll see a lot of that going on. I could foresee that happening. And that's what I would diverge when I say where I would say in the broader Bitcoin market. I don't see that happening. I wouldn't say that Bitcoin is a bubble. I would say that because people are potentially fleeing to the companies to try to get like an outsized return, I could see some people getting caught, and they already are, but on a massive scale, I could definitely see it.
In order for there to be a buyer, there needs to be a seller, and vice versa. At the end of the day, that's just what it is. So if you're making a trade, there's always the chance that somebody on the opposite end will end up better out than you. So hey, folks, remember, this is not financial advice. This is financial entertainment, but that's just the facts of the matter. Like, don't get caught coming out of these things. And yeah, you definitely can. It's tough. I know it's tough to hold a very highly volatile asset when you stomach a 40% drawdown. You don't want to see it go another 30%. I get it, but position sizing is important.
Yeah, to be fair, and it goes back to like what your risk tolerance is and what your time horizon is. I mean, obviously, I've been fairly observant of what's going on in this space with the large, increases. You saw the supply squeeze in Metaplanet stock, or short squeeze in Metaplanet stock recently. That's how I saw a huge run up. And there's been a lot of these instances where you see a huge run up. And, I've kind of been sitting on the sideline as much as I'm still fully ported into strategy. But in my mind, it's like I've seen enough drawdowns happen now where it's like I'm not going to go and chase that anymore, because it just feels like gambling to a certain point. Even though I might believe in the investment on a long-term basis, it's just so hard for me to justify rotating out of strategy now that they have the preferreds on scene. It's just so many more tools in their toolkit, and with the moat that they have in their Bitcoin stack, it's hard for me to justify rotating out. But again, like if I wanted to go chase a higher return, sure, I'd go buy, Mon Pa's corner store shares of that's trading at 17 cents a share. I would consider doing that, but
yeah, I heard the latest Bitcoin treasury company out of Madagascar is, going to get you a quick 10x. Folks,
that's just
not chase these things.
That's just it. And at some point, it just becomes like exhausting keeping your eyes peeled every single day. Like, what's a new Bitcoin treasury? Oh my God, what is it? I got to get in, and And not only that, even when you're aware of it, it's like even still hard to get in, because if it's in a foreign country, you have to get permissions on your accounts and blah, 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 blah. It's if it was easy, everybody would be doing it. So just remember that.
Very true. Very sage advice. Love it. Cool, guys. Love it. Thank you for the super chats. We'll go a bit longer. If anybody wants to have a question answered, please, by all means, drop in a super chat. We'll get to those briefly. Then I want to highlight this comment right here, because he's telling us what the ticker Stretch is trading out on Fidelity. MCSTP on Fidelity, folks. MCSTP. I was pretty close. So that'll get you Stretch. And I'm currently waiting for Strategy's website to go ahead and give us this tab because I want to see the details as soon as possible. I saw their website was down today for maintenance, and I really wanted to get in there and see some data. But you know what? That's fine. Give them time. Now that it's up, I was really hoping we'd see it, but not quite.
Robert Schmidt mentioned about interactive brokers not letting them buy Metaplan or SWC. I have interactive brokers, and I believe that they will let you. There's somewhere a menu in there somewhere where you have to specifically ask on a per region basis on what you want to be allowed to trade. So when I made my account, I went in there and like requested all regions, and it basically approved it at like, the click of a button. So just dig around in there. It'll ask you for permissions on specific types of products, but also like equities by region. So I would look at the region part.
Absolutely. From Daniel, truth be told, I did treat the introduction of SQNS like an IPO and made a few dollars for myself when I jumped back out. Now I'm thinking of jumping back in and hodling for the duration. And, this is why the stock price goes down, folks, because people sell it at a lower price than what it was at yesterday. So, this guy, Daniel, nice job making some money on that trade. But you got to be prepared for that, guys. Like when you see a stock trading at a huge multiple, let's say it's trading in an 8x MNAV and it was just at a 2 last week, like you'd be crazy to think like that people aren't going to be jumping out taking profit. It's market psychology, it's investor psychology. So always remember that, folks. Always.
I did when Strike came out. I jumped on that and I think I grabbed like $88 a share or something. And obviously I was not expecting that type of product to return anything crazy right away, but I think it pumped like 15%. And I was like, you know what? I'm just going to sell it now and roll those proceeds into MSTR shares. So I did. And then obviously it went on like another tear for like another 20% or something. So
right.
Pretty wild.
Dave asks, better to buy treasury companies at low or high MNAV? My answer for this is, if you have a low MNAV, you can't execute the strategy as well. So, but remember that MNAV is just valuation and you can go down in valuation. Therefore, you can go down in MNAV. So the way I like to look at it is that if you have a high MNAV, let's say you're trading at a 7x MNAV, but you see a company that has a very clear trend of aggressively buying Bitcoin historically, and you don't think that the market's going to start pricing it at a valuation that would indicate a 2 MNAV, then obviously company trading at a 7 MNAV will be able to dilute their shareholders in a much more accretive manner than the company trading at a 2x. So it depends. It depends entirely on, regulatory clarity, a lot of things. That's why I have my Bitcoin treasury company, Goldilocks Zone, that I feel comfortable with. And, your conceptualization of risk is different than everybody else's on earth. So you got to answer that for yourself. But to me, it's like, if I see a company that has historically accumulated really well and they have a run up to a 7x MNAV, I'm not necessarily scared to buy it at that valuation because I don't trade these things. I'm not jumping in and out of them. I have a longer time horizon. So if there's like a company like when Metaplanet went from a 3 to 7 MNAV, I would have loved to bought at 7 because I'm not planning on selling next week. And, obviously we've seen how much Bitcoin they were just able to buy when they were trading at those higher multiples. So, it really depends on the individual investor and your risk tolerance. Aaron, do you have any insight on that?
Yeah, I would just say that, if, like look at Strategy, for example, right now. I mean, you look at like their MNAV is probably something like a 1.8 or 1.7, somewhere in there, 1.71.
Yep.
So, I mean, ultimately, it's just like, look at what they have. So you take a step back and you look at like the recent price action of Bitcoin, right? So we've seen some pretty insane levels of consolidation at this like 118 level, really about 2 weeks, we had a pretty good run up to this amount, and that we chopped sideways for a while. And so just to put it into context, you see a sideways move in Bitcoin, and then you see what they were just able to raise with STRC, what they're doing with the rest of the preferreds, and then just like think again, like we only had a Bitcoin run up just 2 weeks ago. That's why I would say, like, if you're in this trade, make sure that you kind of experience both sides of this volatility before you make any rash, like a long-term decisions about where you're going to stand with this. And again, not financial advice. I'm just talking about what I would do. But ultimately that's just kind of the way I see it. I don't really like look at that MNAV and would obsess over it by any means. I would look at the broader picture. Like, do I think Bitcoin is the best capital in the world? Absolutely. Is it going to go up in the short-term intermediate future? I absolutely believe that. And so when I see like a low MNAV, I'm not discouraged by it. I just look at the broader implications of the business, what they're doing to, etch out that income streams on different parts of the yield curve. And that it's just, for me, it becomes a no-brainer. That's what I would say.
Sure. Good answer. Absolutely. Who is Stride positioned for at this point? Junk bond rates? Yeah, that's essentially what it is. Let's look at Stride really quick because they're effective.
I think they hit an all-time low today, I think.
So their effective yield is 11.9, $84 price. When did that become tradable? I'm trying to remember exactly when that became tradable. Stride. June 6th. Oh my, it's not even 2 months old yet. It's crazy how fast time is flying in this paradigm. But right here, it's down 1.87%, and ever since it became tradable. So that's who it's for. People who want, as of now, slightly negative capital appreciation with a really high effective yield. But remember, it's not guaranteed that it will even pay out. So that yield is just crazy to even look at.
So stuff like that, that's how I see like a lot of maybe JEPI investors would be this type of person.
Yeah, for people who don't know, that's the JP Morgan premium income ETF that pays a dividend that's pretty high on a relative basis toward like traditional equities, traditional investments.
Yeah, I don't know if it's 12% anymore.
Yeah,
with 8.22.
Yeah, so Stride is just paying out a crazy yield, and remember though, it's like the least senior in the stack, so the dividends are not guaranteed. Saylor can just decide, we're not going to pay them, and they don't have to. So with that added risk, that's why the yield's so high. But hey, who is it positioned for? People who want to take the risk to get that crazy high yield. Take $1 million, put it in Stride, and get $120,000 a year, give or take. It'll be interesting to see what happens with that effective yield, obviously. But
how often does STRD pay their dividends? Is it it must be quarterly?
Yeah, exactly. Yeah. Next payout's September 30th, right there. So yeah, quarterly dividend payment. So you put $1 million into Stride, and then every 3 months you're getting a $30,000 check. What is that? Yeah, $30,000 check. Remember to pay your taxes on the dividends, folks. That's something. Just got here. Earnings report. Good news or bad? Hey, it's not out yet. This is a preview. Now you just got to wait for a couple days. We love that. Is he going to make strategy a target for a broke government like the Hunt brothers who beat the silver market but got smashed by the system for winning? That's a great question. And it's actually one that I've raised on X multiple times, is that, there is this huge question of like the nationalization of assets. I know that I can't remember the exact act. I think FDR said, we're going to confiscate your gold. I think FDR was the president who did that. So who knows? Ultimately, this is a democracy. Ultimately, you have people that are unproductive just deciding what to do with the resources of the productive people who are providing them. So it's an interesting conversation to be had. And, I always frame it as, these are some capital entities that are going to have more power than governments, essentially, just because if they have the most Bitcoin, why wouldn't they have the most power and optionality? If they have the most capital in the world, the most of the best.
I think this line of inquiry is probably the best possible argument for cold storage Bitcoin, at least in terms of what I view as like a realistic challenge to the financial paradigm that we're in now with the treasury companies and just where we sit with that.
Absolutely. And that's it for the sovereign purposes, is that, you can keep the key in your head, folks. So there's no replacement for cold storage Bitcoin. And, Saylor himself says there's no second best. I own cold storage Bitcoin, for that reason. It's like I have something that I view as the most safe an investment can possibly be. Totally decentralized network, the keys in my head. And it's just something that I don't believe that it's almost like totally unassailable. That's just the best selling point of Bitcoin. Love it. Aaron, you want to take this one? Seems like the market doesn't want it.
Oh my God. Well, like based on what? Like what you're seeing this week?
Oh, you mean the best performing equity of the past 5 years? The market doesn't want it?
Well, it's like it's just funny. It's down 2% in the past month, up 15.65 in the past 6 months, and 31.5% year to date. So I mean, like, what is that on an annualized basis? Probably a little
It's up
less than
134% a
60%.
year.
Yeah.
So yeah, whenever you have a down day, if you just say the market doesn't want it, well, thank you for your great analysis there, detective.
It's just that none of the people that say these things are like wealthy. They can't be. Like if they are, they like got lucky on one gamble, like they bought like a scratch ticket or hit the Powerball or something. They're not wealthy based on their investing strategies, because otherwise they wouldn't ask questions like that.
Right.
Or make statements like that. But no hard feelings, pal. But
Marcus says, why is Minnesota the best state? It's not. It's not the best state, but it is pretty damn good. The state park system is the best in the country. The North Shore is a world class, folks. That's my answer to that.
I think the summers in Minnesota is the selling point.
Incredible. Absolutely. Best weather in the world. Love it. What do you guys think about strategy growing their software business and making it profitable? Partnerships, buying startups, building a financial app, one-stop shop to buy all their products. You know, I don't know if I'll answer every one of those questions directly, but I think it raises a larger question, like what does strategy do when they have all the Bitcoin that they want, when they have the unassailable moat? You know, it's funny that like this is the way I always frame it, because people ask like, what does buying Bitcoin get you besides the capital appreciation? It buys you the most optionality. It buys you the most freedom to do whatever you want. You know, when you're the most valuable company in the world because you have the best position of financial strength, you can literally do anything. And like that is the selling point. It's like, I want to be a shareholder in the company with the most financial strength because they can pivot and do anything that they need to in order to protect their shareholders. Buying Bitcoin gives you more optionality, and they've bought the most of it. So when you've bought the most amount of freedom, it's tough to not want to take part in that. And, you know, right now their software business, I do think it's interesting what they're doing, you know, kind of merging BI with AI and seeing what comes from that, what products they could do. I think having an operating business does have value. But, you know, a lot of this other stuff, like speculating on partnerships, buying startups, a lot of it is like, it's just speculating. But like, I do think that raises an interesting question of what could they do? And it's like, we don't know. But right now, I think it's very clear that they're going to continue to offer the best Bitcoin backed credit instruments, like view their financial products as their products.
What they should be doing is using their AI to instruct their BI platform to subliminally tell their customers to buy Bitcoin.
There you go. There's an idea. There's an idea. Yeah, and you know, Sailor Super Genius using Super Genius AI. That could be an idea for him. Yeah, absolutely. Love it. All right. What do you get with stock shares that don't pay dividends? Pride of ownership.
I'll take it.
It's called capital appreciation. Capital appreciation. All right, guys. Well, thank you so much for tuning in. Really appreciate you tuning into this live stream, just talking some MSTR. You know, it's been a fun time. Just checking in on our viewership. We hit 4,584 viewers. That's pretty awesome. Not bad. We'll take that, folks. But hey, I wasn't able to get some content to you guys because of the technical difficulties I was having today. Just not working at all. Super frustrating stuff. But that's okay. I will be back. Tomorrow, I will be speaking at the Minneapolis Bitcoiners meetup on Bitcoin Treasuries. I'll be a panel speaker. So if any of you are in the Minneapolis area, please, let's have a beer. Buy me a vodka Red Bull. That'd be fantastic. Love it so much, folks. Aaron, do you have any closing thoughts?
Well, I know you're not one for price predictions, but I am. I'll go ahead and put it out there. I'm going to go 225K Bitcoin on December 31st, or by December 31st, rather. 225K Bitcoin.
Why are you so bearish?
Yeah, right. Hey, I'll eat my words if it comes to that. I will gladly eat my words if it comes to that. If I'm too bearish, that's awesome. But no, yeah, my closing words are just obviously we'll see. I'm so anxious to watch that earnings call coming up. That's gonna be fire. I'm looking forward to any other announcements that they might have. I would urge everybody in here, if you haven't watched the video that for Fong and Michael when they did the stride or the stretch presentation, I would definitely go and watch that.
Yeah.
If you're not bullish enough, you need to go watch it. So, but yeah, a lot of good, amazing catalysts on the horizon. We're going to see Nakamoto, 21 Capital get running, a potential S&P inclusion. And then, I mean, we didn't even really delve into this at all. So maybe this is a topic for a future stream or something. But if you really look at the broader economic picture and the rate cuts on the horizon, because I think the rates cuts are coming and the money printer is going to go burr. And if you combine a low rate environment with the accumulation of Bitcoin treasuries, I think you're going to see it's going to be the most crazy rally ever. And it's going to be the most hated rally ever. So strap in, folks.
Absolutely. And, just based on the predictions, yeah, I am not one for price predictions. You're right. But I did do a prediction on, I looked this up because I made it. I wanted to be sure I was right. I predicted that MSTR strategy would own 660,000 Bitcoin by the end of this year. And I wasn't thinking that they would be inventing all these preferred stocks, finding these new ways to accumulate Bitcoin, doing this stretch preferred offering, getting $2.5 billion to just smash by 21,000. So it looks like they're going to smash that goal. They smashed the BTC yield goal. They're going to smash my BTC a total accumulation goal. I don't know. Do you think that they end up with 700,000
by the end of the year? Yeah. Yep. I mean, they got, what is that now? 5 months. So, yep.
Absolutely crazy. Craziness.
I think, I mean, again, like I just, this level of demand is just insane. And I said it at the front of the first part of the stream, but I would urge people to go watch the CEO of CleanSpark on David Lynn's podcast. He talks a lot about this and how his vision of the Bitcoin price by the end of the year. And I mean, basically, he kind of said what I said, really, about being $200,000, and it's basically. And they asked him, "What's your reason for that? Do you want to extrapolate on that?" And he just goes, "Supply and demand." And I think it's so true. It's demand of a perfectly scarce asset, and the floodgates are going to open.
Love it. Awesome. We'll end on there. Aaron, thank you for joining the stream. Really appreciate it. And guys, thanks for listening. We will be checking in very soon to talk more MSTR because, hey, the most important earnings call in world history is in 2 days. So you can bet that you'll hear more.